Good morning, everyone, and welcome to our first PKF Ignite conversation. This is not a webinar. I actually don't like the word webinar because it reminds me of a lecture. And the whole point of today is, and of our Ignite platform, is to help small business owners. So what we have in mind for this is for this to be a conversation and a Kickstarter for a conversation between us and you, the business owner. So please do not feel that this is the end of just a webinar. If you have any questions, if you've got anything that we haven't answered during this, please feel free to throw it up on a chat or drop us an email. We'll be handing out all our details towards the end of this session so that you can get in touch with us, because our ultimate aim is to help you. We understand that business owners are very busy at this point. COVID's keeping you, COVID's keeping you busy. Life is crazy. It's hard enough keeping your business alive. So our aim is to really give you relevant and practical advice to help you with your business. Today, we are lucky to have two who I think are two of the best people in the respective industries with us for an hour. We have Nicole Rousseau, who is the head of PKF Ignite, which is our cloud accounting solution. Nicole is cloud accounting in this country. She has walked the cloud road from day one. She sits on the Xero Advisory Council, one of only 6 people in this country. And we're very blessed to have her as a leader of PKF Ignite. And Nicole will be dispensing some advice to us on cash flows and how we can maybe track our costs and how we can use different products and platforms to make our lives easier in terms of running of our business. And then we have with us Daniel Goldberg as well. Daniel's the CEO and founder of Bridgement. Bridgement is one of the leading FinTech lenders in this country. And we'll hear a little bit more from Daniel about what the word FinTech means, what it represents in the industry, because to me, it feels a little bit maybe high end, and it feels a little bit inaccessible and like it belongs in the future. But I think I'm, up to 6 months ago, that's what I thought, but now I'm totally wrong. So with that, guys, thank you so much for your time, and thank you for being here and dispensing some of your knowledge to our listeners. So Daniel, let's maybe start with you.
Yeah, thanks, Waldek. Thanks very much for the kind introduction. Really excited to be here with you today.
Daniel, please tell us about the meaning of the word FinTech, because for me, you're starting to see that word everywhere in the media at the moment, yet the concept is not really known to most people. And, even to me, it always sounded as if FinTech is a term that belonged to the banks, the big financial institutions, hedge funds, etc. And I never really felt like it was applicable to me as a small business advisor and to some of our small business clients. Yet we're seeing FinTech popping up as a potential solution to small businesses. So can you maybe just explain to us what FinTech means?
That can mean many different things. It can mean a new way of providing funding or lending, which is what Bridgement does. But it can also mean a new way of performing payments. And so there are many new FinTech payments popping up all over the show, creating new and different ways for businesses to trade with each other and also to obviously sell to consumers. There are many other forms of FinTechs, remittance FinTechs, banking FinTechs, insurtechs, which is, also in a sense, a subcategory of FinTechs. But when we look at the sort of subgroup or subsector of FinTechs being lending FinTechs like Bridgement, what does it actually mean? What it means is we use technology, we use the latest platforms, the latest technology with alternative data. So we use new and different data to make decisions on who to provide funding to. And we use sophisticated and revolutionary or disruptive data science or algorithms that uses that alternative data to make those decisions and to inform better decisions. And the outcome of all of this is that it means we can provide funding a lot quicker than a bank. We can do it a lot more simply without the need for reams of paperwork and lengthy forms. It means that we can underwrite small businesses where, you know, it's really difficult to underwrite them because there's limited information. They don't have a beautiful set of AFS ready to analyze. And so all of these things enable us to essentially democratize financial services for SMEs and make it more accessible, make it a lot quicker to obtain and a lot easier, or you know, have a much simpler application process to obtain it. And so where, you know, Bridgement started was, we looked at this whole ecosystem in South Africa of SMEs and this huge need for funding, where, you know, the estimates vary wildly, but they go up to about 340 billion rand of unmet credit needs for SMEs. And we looked at this and we thought, how can we fix this? And one of the first things we did was we went and built a Zero app. And that was one of the first ways in which we innovated and simplified the way for businesses to get funding by simply connecting to a Zero app. We've of course expanded a lot from then, and so we have Sage apps and QuickBooks apps, and we cater for businesses that aren't on any of those apps, etc. But that's a bit of the background behind FinTech lending, and what it's meant for Bridgement.
Great, thank you, man. Thank you so much. And I think if we take a step back and we listen to this, you know, initially when we went into lockdown, we heard this wonderful speech given to us by our president about 500 billion rand to be dispensed into the local economy to drive the COVID efforts. 200 of that was allocated to business in terms of loans and in terms of COVID relief funds. And I think the sad reality was that Tito Mboweni mentioned at the supplementary speech, and now it's been picked up by the media, is that I think roughly 4%, if I'm not mistaken, between 4 and 7% has been disbursed. So when I was looking yesterday at the statistics from the from the Banking Council, I think there were 30,000 applications for the grants, only 30,000, of which only 5,000 have been approved. So 25,000 are either lying in unapproved bucket or still in being approved bucket. And to a big degree, and I hate to use the analogy of oxygen in this COVID environment, but I think, you know, for business, money is like oxygen. You have to have it at the right time. There's no point getting a double dose of oxygen when you've already died. So dispensing money and getting it after COVID or at the tail end of COVID actually means nothing for a small business, because businesses needed that money during this period. So from your point of view, where do you think we've gone wrong? And do you think that this is an endemic problem of only South Africa, or have you seen this worldwide, this inability of the banking system to deploy funds quickly enough?
It's really a good question, and something that's so important at a time like this, where so many SMEs are under a lot of strain, under immense cash flow pressure. We've seen similar government programs, whether it's a direct injection of liquidity or funds into the market, or a guarantee that's offered to financial institutions to encourage them to inject funds and continue lending. So we've seen similar programs around the world, you know, similar programs in the UK, the US, all over the show. But there's a few key differences which I think are probably what are making all the difference between, you know, why in the US it has been so successful, in the UK it has been so successful, or at least a lot more successful than in South Africa. So I think to sort of take a step back, I think when the South African government announced, you know, there was this 200 billion allocation, it was announced, firstly, it's actually 100 billion, and then potentially an additional 100 billion after that. But that, I mean, that was an incredible initiative and absolutely necessary. And I really commend the government for doing it. Their head was definitely in the right space. I think the problem has come with the execution of it. And as you already hinted to, you know, the stats say that only 7 billion so far has been deployed in about 2 months since it was launched. And that unfortunately is just, you know, not good enough. 7 of the 200. It sounds like a lot, but it doesn't go very far when you're talking about an SME population, you know, that has at least about 700,000 formal SMEs and a whole lot more north of 2 million if you include informal SMEs. So, for them to have only dispersed 7 billion to about 4,800 SMEs, you're talking about, first of all, 4,800 SMEs is less than 1% of the SME population, of the formal population at least. So, it's had minimal impact, or it's hardly touched any of the SMEs so far. And also, if you look at what like the average amounts are, you're talking about roughly, I think it's about 1 million or 1.5 million per loan, which is great. But there are many SMEs that have needs that are well below that, and in fact, the vast majority of SMEs needs are actually below that. So you have to question, why is that so high? And it ultimately comes down to the fact that the government has only allocated those funds. They've only worked with or partnered with banks. And unfortunately, that I think has been the biggest stumbling block with this whole thing so far, because banks are, they inherently, and for a long time, it's nothing new, they have not been good at funding SMEs. And that's why FinTech like Bridgement exists, by the way. And the reason, why they don't fund SMEs very well, it comes down to a few things. But, really, it depends on the, small businesses and large businesses cost the same for a bank to assess and to underwrite. It's the same overhead. And so naturally, they always end up focusing on the larger guys, the more profitable guys. The other problem is that smaller businesses are a lot more difficult to underwrite. There's a lot less information available. And so it makes it a lot more difficult to assess them. And so I think the biggest stumbling block has been that banks have just not been working with fintechs and other non-bank financial institutions to disperse and distribute this funding. So I think that's been part of the problem. I think there are a bunch of other problems where the criteria has been too onerous. SMEs don't want to sign personal surety. They're only allowed to apply at their bank. What happens if their bank happens to be a stricter bank than the other banks? Every bank is allowed to use their own credit assessment, which, as I just mentioned, tends to favor the larger businesses. And so I think there have been a couple of stumbling blocks along those lines that we really need to fix in order to disperse that 200 billion properly. A government should be prescribing what that standard risk model is so that all the banks can conform to it. And then that also removes uncertainty. So one of the problems with this guarantee, and for those of you who might not understand how the guarantee works, essentially what happens is the government says to the banks, you must continue lending. You don't stop lending. We know it's a high risk environment. You must continue lending and injecting liquidity into the market. Businesses need funding now more so than ever. And for us to encourage that and to help you de-risk, because it's such a high risk environment at the moment, we will give you a guarantee. So that's what the 200 billion is. It's a guarantee to the banks to say, if your clients default on those loans, we will cover that. It's insurance essentially. So they give about 90-95% coverage. And part of the problem has actually been that government has said, well, we're giving you this coverage, but actually when you come to claim from us, we'll decide. And the problem with that is that leaves the bank thinking, well, maybe we don't have this full coverage. And so that means we're going to hold back and not deploy it as much. So I think the problem lies partially with government and the way they've deployed it, the way they haven't prescribed what the risk model is and all of the sort of T's and C's that go with their guarantee, but also I think with the banks and only having banks deploy that funding is problematic. There are fintechs like Bridgement who have a very serious impact on the market. I'm actually the chairperson of a association called SASFA. So I'm the chairman of the board, and in collectively across all the SASFA lenders, which are non-bank lenders, some traditional lending companies, but a fintech like Bridgement as well are in the mix. And collectively, we've lent in excess of about 20 billion rand to over 100,000 SMEs in the last 5 years. So that we have the point that I'm trying to make here is that we have a very significant and tangible effect on SMEs in South Africa. We're filling a gap, a void that has been left by the banks. But, when it's come time to this COVID loan guarantee, the 200 billion loan guarantee, unfortunately, the government and National Treasury and the Reserve Bank have completely overlooked non-bank financial institutions like Bridgement.
You know what? I think that I was speaking to someone yesterday, and they are called COVID an accelerator. He said, no, it's a revealer. And I think it's actually a great word, because I think what COVID is showing us, and I think we've known it, working with a lot of our clients and a lot of the participants today on today's call are our clients. The attitude of the business owner to the bank is really one that, well, the bank will help me when I don't need them anymore. That's when they'll phone me to give me money when I've grown to a stage that I'm self-sufficient. And B, we've seen from our own involvement with our clients in terms of assistance of the paperwork and the packs that the banks require for these COVID grants and funds, how onerous and time consuming it's been. It's taking weeks, and you can't get a decision, and you're getting asked for continual updates of documents. And the poor business owner sitting there, and he's watching his business kind of crumbling a bit, and he needs that money tomorrow, not in August. And I think it's really showing, yeah, I agree with you. I think South African banks have always pride themselves on the risk procedures. But I think it's been the detriment at the moment, because, when I was chatting to our partners in the US, they had a model where the government dispensed the funds as a loan. And once you've proved that the funds were dispensed as a loan, they got converted into a grant. And similar models could be deployed. Where I think, first of all, it's all loan funding. And second, as you say, a lot of the clients I've spoken to do not want to sign those onerous sureties, because effectively your bank becomes your quasi shareholder in your business. And they've got the right to really pull the funds back at a quicker pace if they want to. And so it is very, very challenging. I think as well, so you say, that from your side at Bridgement, maybe looking at your business, I'm sure, and just chatting to you, it doesn't sound like you guys have had much sleep the last 3 months, because as you say, if you guys had 20 billion rand that you've channeled over 5 years as a national body, I know the numbers of applications going through you alone is just staggering. Do you maybe want to just share with us what you've seen in the market and what you've seen from your personal perspective in terms of the number of applications at Bridgement and how big the demand actually is?
Yeah, no, absolutely, more than happy to. And maybe just before I dive into that, I wanted to mention something which is related to this, but to give you a sense of how well these sorts of government programs have run overseas. There is a US FinTech lender. So there's a FinTech lender in the United States that has funded over 209,000 SMEs to the tune of about $6 billion. We're talking about 100 billion rand. Obviously the US market is significantly larger than us. There's way more SMEs than us. The point is though, and by the way, they are I believe they're the second top funder of government grants to SMEs in the US, second out of all the banks. Wow. So this is a FinTech that's rating way higher than all of the other banks in terms of deployment of those funds. It just sort of illustrates that point a bit. In terms of what we've been seeing, so yeah, I mean, I think there've been some amazing relief measures that have been announced, since the beginning of shutdown and along. The 200 billion, an amazing measure. Its actual implementation has been a little disappointing, but hopefully they'll be able to start working with us, and we'll be able to fix that soon. I think that some of the private sector relief, certainly what the banks have done with their payment holidays has been fantastic. The Rupert and the Oppenheimer funds, those were great, but unfortunately 1 billion rand, while it sounds like a lot, is actually a drop in the ocean when you're talking about the SME market. So we've seen, those initiatives were amazing, but they were, the Oppenheimer and the Rupert funds were gone in a day or two. We saw Department of Small Business Development have been completely overwhelmed, this website crashing, and they only had 500 million rand to play with. So, the relief measures the external relief measures outside of the, Bridgement we've seen have been great. And we've definitely, we've told all our clients, you apply for all of these. You absolutely must. The likelihood may be low that you may get it, but it's worth a try. You have to take advantage of all the relief measures, especially all of the tax and the UIF things that have been made available in terms of internally at Bridgement. So yeah, we've got multiple products and we're quite agnostic of industry. So we don't have any particular exposure to a specific industry sector. We've got clients in manufacturing, wholesale, retail, restaurants, professional services, industrial services, construction, mining, etc. So we didn't have any particular high exposure in any industry, but of course, and industry has of course played a very large role in whether your business has been able to trade or not, and that of course plays a large role in credit risk, etc. So for us, we offered payment holidays to all of our clients that were in good standing. About 60% of those clients took up those payment holidays. And the payment holidays varied, so they just about all were in the range of 2 to 3 months. So pretty much by the end of June, most of them should be ending. Sorry, I mean, we're in July now. I'm losing track of the date. So yeah, most of our clients should actually be off payment holidays. I know there are a couple that have extended, especially in industries like we got quite a lot of clients in eventing and conferencing. Unfortunately, those businesses, there are only so many businesses that can pivot online. Eventing and conferencing guys, it's quite difficult for them, especially the people that lease out the equipment and all of that. So those sorts of businesses we've worked with and extended their payment holidays, those have continued, etc. So it was quite amazing because at the beginning of shutdown, we obviously minimized like all of our marketing efforts. The markets were in turmoil. We wanted to tread carefully. And despite doing that, despite minimizing our marketing efforts, we actually saw a huge uptick in demand. So we had minimal marketing activity, and we actually received funding applications to the value of, in excess of about 855 million rand since the beginning of shutdown. So we've seen absolutely huge volumes of applications. It's definitely been a busy time, but between managing existing clients and helping them with all the payment holidays, as well as having this huge influx of new applications, that figure it's a large figure. It's more than what the whole Department of Small Business Development had allocated. They only allocated 500 million. So, and we're just one funder in the market. I'm sure the banks have had way more applications. So, huge demand. And, being a FinTech, we are well positioned to process all of that. We're lucky that we have really solid systems. To give you a sense, over 60% of applications that come through to us get decisioned 100% automatically without a human looking at it. And that's how we're able to move so quickly. That's how we're able to get funding into a business's account on the same day they apply. And then the remaining 40% that don't get 100% automatically approved, those, there's a minimal sort of human oversight to make that final decision. So that's pretty much what we've been seeing. It has been a crazy last few months, and we're just trying to be there as much as possible for the SMEs.
Yeah, thanks, Daniel. Yeah, I agree with you. I think it just shows the demand that's out there, and it shows that, and I think we're not saying that the banks are totally failing. I think that banks are doing the best that they can within the given constraints, because they have to, as you say, because they haven't really been backed fully by government, and it's been an unclear mandate. They have to also live up to their own risk profiles. So it's a bit of a catch-22, but I do think it highlights the use of technology at this time. And Nicole, you've been, Dan and I can speak for hours, but from your side, on the Ignite side, on the cloud accounting side, obviously, in many ways, you know, the conversation of cloud accounting has been in the country, and but it has been a little bit maybe slower. You know, we always kind of follow the adoption rates of US and the UK. What have you seen over lockdown? Because all of a sudden clients can't get into their places of work. They can't get in, but the banks are needing numbers. Business owners they need financials. They need numbers to look at. They need to start preparing budgets, forecasts. Has this been a busy time for you in terms of clients? Have you seen that clients that maybe were on the fence about cloud are now jumping onto it, seeing that it's actually the only solution that works?
Yes, thanks, Waldek. Yeah, absolutely. So I like what you said earlier about your client calling it a revealer, and that's absolutely the case in this situation. If nothing else, this pandemic has highlighted areas where we needed improvement in our business processes or whatever the situation was, and 100% with cloud. We have had a lot of people, like you say, who were sitting on the fence, realizing, shucks, if I had been on cloud, we would have been able to continue as normal. So yes, cloud is the only way to actually keep your business going while something like this, while you can't go to the office. You know, you still need to be able to do your invoicing. You still need to know, you know, what's going on in my business. And it's simply not possible if you're not using these cloud technologies. And you were talking about the information that you need to get ready for the banks, etc. Yeah. My spin on the banks is, you know, like you say, partly government, but, you know, they're not really geared to, I don't think they really understand SMEs, and their processes aren't geared to service SMEs. You need to be agile. You need somebody like a Bridgement, that type of thing. An SME can't wait a month, 2 months for funding. By the time they're asking for funding, there's problems. And cloud kind of assists with eliminating that. So like Bridgement, it literally plugs into your accounting system. You apply online. Daniel will still get to that, but you can get funding in 1 or 2 days easily. But really what the cloud does is it allows the business owner to actually access the platform, and you can see, because what's important, I need to see what's in my bank today, who owes me money today, who do I need to pay today. You can't see that if you're not using cloud technologies. You can't make an informed decision if you don't have accurate and up-to-date records. And that's really where the cloud technology comes in. You can really make the best decisions for your business using those applications.
And Nicole, in terms of the bank applications, which, you know, obviously cover historical information and COVID information, and then this dreaded word called a forecast. And I think in many ways, many small business owners live on cash flow, right? Which and you know, you have an intuitive feeling of when a business is going well, or if it's not going well. However, I think with COVID, so much has changed that all of a sudden your overhead structures are different. Your revenue models have to go to adapt and change. So from that point of view, forecasting becomes far more important than it ever did. And because we're in a volatile environment, and banks are asking for forecasts, which probably might be near impossible in this environment, but they want something. So in the old days, we used to hack away on Excel and put numbers in, and then please Lord, it adds up. And you know, then if you have to change something, it took you hours to do it. So the forecasting was always a challenge, I felt, because the business owner isn't really ingrained into the detail of the numbers, and the accountant is maybe too far removed from operations. So it was always a challenging process to get right. I know that Ignite, you know, we've partnered up with Spotlight. So in terms of forecasting and reporting, maybe just walk us through how to do these tools and these add-ons onto cloud accounting solutions help us to put forecasts together, and how do they help business owners to actually do that type of exercise, which I think is more relevant than ever.
Yes, cash flow, absolutely critical, whether it's for the bank or, you know, business owners need to be able to plan, not just for 3 or 6 months. We need to be looking 18 months ahead to kind of see, one, is our business going to survive? If we're in trouble, how are we going to make it survive? And the cloud tools is absolutely amazing because you're working with real-time data. You've got, like you were saying, the Spotlights of the world, Futurely, Fathom. There's so many of these, what they call plugins into Xero, like Bridgement is, where they integrate with your live data. And what it allows us to do, you can very easily make a call, your client can call Waldek, your accountant, whoever, and say, listen, guys, I need this. And in a matter of hours, you can do a little scenario. You can do a cash flow projection by asking the client a couple of questions, the basis of a cash flow projection, normal questions, and the tools allow us to plug that in. And then in a couple of hours, you've got a proper cash flow projection. You can do scenario planning with your client. If your client phones you up and say, you know, we're trying to do what we can to survive. We're thinking of doing, I don't know, maybe cutting, letting 2 people go, or maybe adding this to our revenue stream. Do you think it's going to work? Is it going to help me? Then that scenario planning can actually be plugged into a Spotlight, and you can do the scenario for them, and you can actually show the client, if you let these 2 people go, this is the impact on your business. This is going to be the impact on your revenue stream. And it's seamless, it's understandable language. It's very easy for you to present it to your client. You don't need to be a qualified CA to understand what's going on in the projection, because that's often something we forget, that a lot of the business owners or SMEs, they're not qualified accountants or CAs, they're entrepreneurs. And that's another nice thing with the cloud technology. It presents it in a way that's easy to read for the business owner. So it's actually a pleasure doing this type of work. If you're using cloud technologies, there's no administrative burden, and we can actually help our clients immediately.
And Nicole, in terms of, let's say I'm late to the party and I've been running my books on Excel or Pastel or QuickBooks on a desktop, right? And now I say, shit, I can't get into the office. I want to move on to cloud. Is it too late? Do I have to wait till COVID's over? Or can I migrate onto cloud, say, tomorrow if I want to? If I say, you know, this actually starts to make sense because I can start seeing my data in real time. My bank feeds into my accounts feed into my projections. Everyone starts becoming a little bit happier. And whether my accountant sits at home or in Cape Town makes no difference. And if my auditor is sitting in Pretoria, it actually doesn't make any difference. All the documents are online, your source documents are online. Can it be done in this environment or not?
Absolutely. It's never too late. So that's the first thing. It's never too late. I'm glad if you've seen the light. You should. So you've got options. So you can either take your old desktop application and have that data converted into a Xero file, or you do a trial balance, or we do like an opening balance take on. But absolutely, it's very easy to make the move to cloud. They make it really easy because they do the data conversion for you into Xero, which is also important for the clients, is you don't lose your history. So that you'll still be able to look back. And like you said, it doesn't matter where I am or where the business owner is. You only need internet connection. You can access it on your mobile, tablet. It doesn't matter. Do your sales invoice off your mobile phone. So yeah, no, make the move. It's definitely not too late.
And I think as well, what's interesting is that because you can pull the history in, someone like a fintech lender would need the history to make a decision on. So because you have it in the system, I think it already should, even though you convert, hey Daniel, it should still be usable data, right? Or is that a challenge? Or do you need to be natively on that platform for a while for you to be able to make a decision?
Yeah, it's a good question. So we often do see this. It really just depends on how long they've been on the platform for us. So you know, we need like a minimum of about 6 months history, bare minimum. So yeah, if they've been on shorter than that, then we usually just get them to supplement that with whatever system they were on before, or you know, they can connect their bank feed. We offer a whole host of different options for those situations.
So let's say I am currently on a normal desktop solution and I want to move to cloud. Can I still make use of your services in that environment? I can, right?
Yeah, absolutely. So we cater for all businesses, whether they're on cloud, desktop, or good old-fashioned pen and paper. And yeah, we realized we had to do that because in South Africa there are still many SMEs that are still not or haven't moved over to the cloud yet. So yeah, we cater for everyone.
Okay, great, man. So which is good because you don't want to have someone maybe that wants to apply but doesn't know if he fits your model as such.
Yeah,
so it's
absolutely.
kind of agnostic, as you say, of the source data. Obviously, cloud makes it a little bit quicker. So in terms of turnaround times, I mean, average turnaround times for a cloud-based platform versus non-cloud-based, what am I looking at?
Yeah, so you've highlighted an important point there. So definitely, if you connect your cloud platform, it is quicker. That being said, it's not a huge difference. So a cloud platform, on average, people get applied within a few hours, can get funding same day they applied. Obviously, it depends if it's a business day, time of the day, etc. But usually within 24 hours. And the same goes for if they're offline or on desktop, because similar to what you have with cloud accounting, where you can connect your bank feed into your cloud accounting, we actually give you the option to apply to us that way as well. You can actually connect your bank feed to us. So that gives you an option, even if you're not in the cloud yet, to very simply, connect your bank feed. We also, some businesses aren't comfortable with that yet, so we have to accept, like PDF bank statements and things like that. But that's all super simple, uploaded on the site, automatically goes into our system, automatically gets analyzed. So yeah, the turnaround time's slightly longer if you're not in cloud, but still within 24 hours on average.
Okay, cool. And Dale, what have you seen, if you were to give our listeners some tips on mistakes that you see that people make in their businesses when they apply for funding? I mean, I'm not sure, is there like a cheat sheet to say, what should I be doing if I want to apply for funding? Yes, look, my business is my business, so you can't really change that, right? But do you see that, let's say ignoring the cloud-based environment, if I'm giving you a pack of documents, what are the common trends? Is it quality of information? Is it accuracy of it? And because yes, we know that the more robust the platform is coming from, the information, the integrity of it is better, right? And that's where cloud does work well. But let's say, I mean, where are the pain points for you? And what could a business owner do to prep himself or his accountant, so when they submit a PEC, whether it's to Bridgement or to a bank or to someone else, that they have a better success of a better rate of success?
Yeah, so I think to firstly, let's highlight some of the stumbling blocks that businesses might have accessing funding from a traditional institution or a bank. So typically, a clean set of annual financial statements or at a minimum recent management accounts would be required. Often tax clearance certificates, often personal surety and collateral, session of your debtors book, whole bunch of other requirements. Those are sort of some of the stumbling blocks that we see businesses often encountering with traditional institutions. With Bridgement, we don't require those things. So there is no need to submit AFS or up-to-date MANACs. Sometimes if for clients that are applying for larger facilities with us, then that is automatically requested. But the beauty of Bridgement is that if you've connected your cloud accounting, we get all of that automatically from that. So it just completely sort of removes that barrier and makes it way simpler for businesses to sort of mark that checkbox. We don't require tax clearance certificates. We don't require collateral. And that's quite an important point. We see this a lot with businesses in the sort of professional services industries, where they're human capital heavy, they're very asset light, they don't have significant collateral, and that we find they often struggle a lot with traditional institutions. But with us, we don't require that collateral. I think some other important things is just basic housekeeping for your business, keeping your SIP-C records up to date, making sure that if directors have resigned or joined your company, those things are updated is important. You know, obviously, and this is a bit of a no-brainer, but you want to maintain your personal credit score because that has an effect on your business credit score, and that is used by every lending institution in the country. You know, some institutions might rely heavily on that. We use that as one of maybe 1,000 other data points because we use so much data in making those assessments, but it's still an important data point. So of course you always want to manage that well. And you know, lastly, the more detail, the more information you share, the better. So, you know, the more forthcoming you are, or the more data sources you connect when you're applying with us, it gives us a clearer and better view of your trade history, and you know, enables us to verify your trade history a lot better and have a stronger verification, and therefore that can lead to a higher approval rate and a higher facility with better pricing. I think
so those are good tips, because I think those are, you know, in my mind, go beyond just your P&L and your bet, you know, because most businesses look at a profit for the month and move on. So maybe it's also for the business owners on this chat is, if you've got an accountant, maybe that should be, those type of questions should be part of your normal monthly pack to say, am I VAT compliant? Am I payroll compliant? Can I get a tax clearance? You know, how are we looking at SIPC? And many times as well, you know, it's annual returns and being up to date with them, that before you know it, your business could be in deregistration by SIPC. You don't even know about it until you've applied for funding. So those little pain points, as you say, are important, getting your governance in order. Nicole, from your side, quickly, just before maybe we get into the Q&A with our clients and our listeners, we had, you know, we did a PKF survey of the small business market, and I think the one takeaway for me of it is on our social media feed. Maybe we can put it up again onto this chat a little bit later, so you can just, the listeners can just have a link to it. But showed quite a big discrepancy between three things. One is people needing money, people actually applying for money and being successful. So I do think there's an inherent distrust of government programs in this country, that a lot of people, like you said, Dan, almost said, you know what, I'm not even applying. I'm not even doing this because this thing needs sureties. I need to sell my goat and my house, maybe my wife, and maybe the wife you're willing to part with, but the goat and a house you want to keep. So there's almost three layers to it. So when you funnel it down, I'd say 70% of our SMEs needed help. Out of those, maybe 20% applied, and out of those, maybe 20% got the money. So it's important to some degree as well for businesses to actually take action and not just to wait for funding to come. So Nicole, from your side, what are your kind of top tips for businesses in terms of managing your costs and revenues during this time? And what have you seen your clients do that they've done well, that you could say to someone else, shit, you should be doing this?
Yeah, so absolutely. And it sounds like simple things, but it really helps. One of the top things that I would say is talk to your accountant. They're the expert. They know how to help you. Don't make critical business decisions without consulting an expert. You know, I'm not going to, you know, it's like when you go to fix a car, you're going to ask a mechanic his opinion. It's the same with your finances. Talk to the experts before you do anything like that. And it might be simple things before you make crucial business decisions. Yes, we've seen the majority of our clients didn't even bother to apply. They didn't meet the criteria, too much red tape. Yes, making use of the TERS applications, that seems to be the only thing. They're trying to survive themselves. So if you're not selling online yet, really think about moving, maybe not all of your products, maybe your most popular products. You need to start thinking of some selling platform online, because it's going to be a while before we recover, and our economy wasn't in a great state before. Offer settlement discounts, make it easier for clients to pay you. You know, like on Xero, you can add online payment facilities or they can pay via credit card, a Stripe, a PayPal. Make sure your invoicing is clear, and invoice as soon as the job is done. A lot of people do it weekly, monthly. Don't wait to send out those invoices. It's so easy invoicing out of Xero to send it immediately. switch on the invoice reminders, you know, chase up your payments, remind the clients before, like I said, the settlement discount. If you're selling online, maybe offer free delivery. You don't want to lose the customer at all. So rather sell the product and maybe do the delivery for free, and focus on your good customers. Don't try and collect all your debt and waste time on the guys that you know that you might not get it from. Make sure you've got a proper credit policy. You can't manage something that you don't know that you're owing. So make sure that you've got all of the information in there, and just focus on the customer experience. There's so many things you can do now. It might not bring you to 100% capacity, but little things that you can kind of use to tick over, to get the business to tick over until we're up and running again. And just don't see always the bad and be negative. Also see the opportunity. It's an opportunity to try and do something different. So small things like that really goes a long way.
Great, thank you, Nicole. And in terms of costs as well, as you say, by using maybe forecasting platforms, you can actually start playing with your cost structures and seeing the impact of that on your numbers. And I think you raise an interesting point, which is maybe just be busy beyond just accountants. I think this is the time to lean on your providers. You know, if you've had a lawyer for 5 years, an accountant for 10, you know, this is really the time to give them that call. 10 to 1, they're not going to always charge you for every minute, because we had to help as well. But I think you make an interesting point, is kind of rely on all the partners you have around you, and even some of your suppliers, you know, because sometimes in these times, it's better to have that honest conversation. And that's what Daniel's saying as well. Even with your lending partner, have that conversation and say, this is what I need from you. So yes, let the application run through zero, but maybe have a call with Daniel and his team and say, this is what I'm ideally looking for. This is what I need. Can you guys help me? Because the more that someone understands you and your business, the better the decision making. And if sometimes your experts have got a more objective view on you. And I think sometimes I do find that business owners come to us a little bit too late in the game. They come to us when it's almost, you know, D-Day tomorrow morning, and then they need help. So the earlier you engage in terms of restructuring your business to survive this, the better. Then just at the moment, I'm just touching on one or two questions that I'm seeing popping up. Do you know what are our current, the question comes from Donna, what are our current acceptance rates? I mean, would you know what the market is doing at the moment, or can you only really speak for Bridgement in terms of successful rates?
It's a good question. I don't, obviously it's difficult to tell the stuff because every institution has, manages these things privately. Typically, obviously there's a bit of there's an assessment, right? And businesses may fail from an affordability point of view or from a credit risk point of view. So, you may, the 100% that apply, that does whittle down a bit. In terms of what those average rates, it really does depend institution to institution. It obviously depends on the quality or the nature of the businesses that are actually applying to them. So really quite a difficult one to say. If you look at the government grants, in terms of the businesses that have been approved so far, I mean, the approval rates are super low, right? I think if I recall correctly, it was under 1% of businesses. I think so. There are about 50% of the businesses that are still applying, or sort of it's like in this processing backlog. I think they're struggling to get through all of those applications quickly enough. But after that, I'm not 100% sure. I think there were 4,800 applications approved on the 30,000. So you're looking at around a 16% approval rate so far. There may be more that come through once they get through that backlog. But on the COVID loans, the bank COVID loans, you're looking at about a 16% approval rate.
Yeah, so when I was looking at that as well, I think there's a 16% approval. It almost seemed like there was a 16% non-approval, and then there was this big chunk of COVID black hole. We're still in the process of getting approved, which we don't know if we approved or not. which is almost as bad as being not approved.
Yeah.
So,
but I have heard stories of people having their applications lost. They applied and then, you know, something happens and then all of a sudden it disappears, or they don't know what happened. They didn't get a response.
Yes,
so,
yeah. So it's a challenge. There's been a question about cloud accounting, but I think we've answered that in terms of Bridgement and many other fintech companies being agnostic. So yes, it makes it easier to be on cloud accounting because the information speaks between your accounting provider and then your lending provider. But if you're still on transparency. But if you're still on Pestle or you're still anywhere on any other program, you know, it doesn't preclude you from applying. And in terms of rates of interest, Daniel, because that question popped up as well. How do fintechs, I mean, yes, you use clever algorithms and that's what really is the core driver, but effectively, does the system predetermine the rate of interest that's being charged?
Yeah, absolutely. So Bridgement, I can't speak for other businesses. Bridgement uses what's referred to as risk-based pricing. So that means that every business that comes to us will get a rate or pricing that is different. You know, it is customized or personalized for that particular business. And you know, what drives that is, you know, the age of the business, the industry, you know, the directors running the business, you know, who their customers or their debtors are, what their debtors book looks like. A whole host of different factors or criteria comes into determining those. One of the things that Bridgement prides itself on is that our pricing is really, really simple. So I don't know if you've ever, I mean, I'm going to assume you have, but whenever I open up a bank account or a credit card facility or whatever it is, I find it incredibly difficult to actually understand the fee structures. So you'll see like the interest rate quoted there and great, that's clear, that's easy. That part's easy to understand. But then you get charges for opening the account, sometimes 3% to just open the account. You get charges for monthly ongoing fees. You get charges every time you send an email or an SMS or click a button. And what we see is that it's funny. I mean, if you go look at financial results of a bank, they make a lot of money from those fees, sometimes more so than from the actual interest that's being charged. So it's been a personal frustration of mine, just in my personal sort of banking, that I've always found it so difficult to actually understand the cost of finance and understand the cost of having a facility open or anything like that. So that was something when I started Bridgement, it was something that I wanted to solve. And it's one of our core values around having just simple and transparent pricing that you don't need a degree in finance to actually understand. And so with us, what happens is once approved, you get like an online dashboard, and you can do your facility that you've been approved for. You incur no costs if you don't use that facility. So there's no commitment to use it. We often encourage people just to apply, get a facility open, but you're not going to incur any costs until you start using it. So at least you have that facility available for when you need it. And then what happens is every time you withdraw from that facility, you get quoted what that cost of finance is for the term that you take it for. So it is that when we quote that finance cost to you, that is our total cost of finance. There is no other interest, no other fees. That is it. And so you always know up front what you're in for. There are no ongoing accounts or monthly fees. There's no fees to apply, as I mentioned, or create the accounts. And most importantly, there's no early settlement termination charges or cancellation penalties, which really gives you that flexibility. You know, if you take funding, you don't necessarily need it. You can just withdraw, pay it back, use the facility flexibly.
Yeah, and I think that's what I really like about the relationship is that in a way we could start dating. If I'm a business owner, I could link myself up to your platform and I could start seeing what I'm able to get, right? But it doesn't mean that, and I think that's also a challenge with traditional models. You apply at that point in time, where I think at least with you, I could use the facility, then I could drop off it, but still keep it running. And then if I need it 3 months later, your system is live all the time. And I think that's also a great feature because you're not encouraging one-time transactions. It starts becoming a relationship between the lender and the business owner where you need money when you need it, and you shouldn't be penalized for paying it off quicker, for being a good payer, and yes, you're not going to make as much interest out of it, but ultimately I've, as a business owner, have fulfilled my mandate, and I've done it earlier, and maybe I'll come back to you in 3 months again, and so that's the repeat relationship that actually in my mind drives the process here, and not a once-off transaction. I think just because we have to start wrapping up, there's some interesting questions here. And I think some of them get quite into detail of rates and things like that. But I think, Daniel, if people want to know more, because I think there's quite a lot of interest, where can we find you? How do we get in touch?
So I think, so firstly, I mean, our website is www.bridgement.com. So, all of the information on the business and how it works is there. We've got a pricing calculator, which you can play around with to get indicative pricing. I think, the application process is super simple. It's online. You'll see it on the homepage. I've also dropped a link to that in the chat because I saw some people were asking for it a bit earlier. And then you're more than welcome to also email us. So you can just email us at hello@bridgement.com, and we'll be happy to answer any of your questions. But yeah, what we usually encourage people to do is just, apply. You've got nothing to lose. See what you can get, and then happy to answer any questions you have.
Brilliant. Thank you so much, Daniel. Thank you, and thank you for your time and imparting your knowledge, and maybe just explaining to us a little bit more about your world. And it definitely does seem like it's this world, the FinTech word is not this big scary word. It actually you actually got quite a close working relationship with your client base. So hopefully for some of our business owners here, you could become a potential solution, whilst maybe your application is at the bank for the long-term funding, and it could be an interim solution, could become a long-term solution. And I think it just, for me, means that it just really opens up another world of opportunity and possibility for our clients beyond the kind of standard banking channel. So thank you so much, Daniel. I really appreciate it, man. And Nicole, on to you. If there's cloud questions, or someone wants to go migrate to cloud, or just ask a question about it, where can we reach you?
Yeah, sure. You can go to our PKF Ignite website, www.pkfignite. You're welcome to email me, Nicole R at pkfoctagon.com. Yes, get in touch. Let's get you going. People like Bridgement are here to help you guys, and I think it's not about, and I can see it, I've worked with Daniel for a while, they really do care about helping the businesses. They like a partner. It's not just somebody you have to pay. So make use of the tools. It's out there.
Thank you, Nicole. Thank you so much. And thank you to everyone for giving up your time, your hour on a Friday morning. This is the first of a whole series. So please also, if you feel like we need to address a need, we're going to source good speakers and good partners, whether it be on SEO or marketing or other areas of running your business. The whole idea of the series is to help you and empower you and really live up to that partnership word that we always speak about, so that you don't always think of your accountants as the guys phoning you up to tell you to pay a sales bill. But guys, thank you so much. Nicole, thank you for your time as well. Guys, have a good weekend. Keep safe and keep warm, most important. Ciao, guys. Ciao.